week has seen the ECB utilising yet more of their depleted economic armoury. But can Mario Draghi really do whatever it takes to ensure a sustained recovery in the Eurozone? And how will this all affect the single currency? Joining me to discuss is Anders Eklof. Anders, the strength of the British pound seems to have placated the Bank of England that inaction is the right action at present, which is rather a stark contrast to their European counterparts. Do you think the ECB giving almost everything it's got at this stage is warranted? And how do you see this pair performing in the mid to longer term?
My view is very clear. I think that the monetary policy seems now to work its way through the British economy. It's helping the housing sector, etc., and that helps up the growth in the short term. While the ECB is a price stability targeter and has difficulties now in the short term as price pressures are very low, and I expect more action from the ECB. To try to cap or like to keep inflation expectations anchored. So I see further downside in euro sterling, but it's going to be a slow move down, I guess. If you look a little bit further away, I think that there is some kind of consolidation in the private sector in UK, but still you have fiscal policy that's going to be tight. So I think that the Bank of England will have a long way before they raise rates, so they will stick to their forecast. But for the short term, there's divergence here that will help the pound.
US October payrolls rose to 104,000. This seemingly great number is, however, dampened by being hailed as the most mixed up, uncertain, verging on unimportant NFP report due to the White House shutdown last month. Now, this figure may be yet another indicator of the impact politics can have on the economy, but how will that, coupled with the downgrades in Europe as well as the ECB rate cut, affect the euro against the dollar?
I think we are now going to consolidate for a moment here, and with this data is already old and blurred by different reasons, and but we will look forward to the next CPI print in Eurozone and see what that matters for the ECB staff forecast, etc. So I think the euro dollar can bounce a little bit higher in the very short term perhaps, but then we will sell against the rate meeting in December. So we see new lows in euro dollar in 1 to 3 months.
The euro yen was also hit by the rate cut, falling down to 131.78, with it then bouncing back up to 132.70 on positive US data. However, the Japanese currency suddenly recovered strongly mid the US session, with little behind the movement except maybe for falling stocks. Now, the Japanese yen will be impacted by the NFP figures, so with all of this in mind, what is your outlook for the euro yen over the given timeframes?
I foresee dollar yen in some kind of range here. I think that US rates are not going higher now. The Fed is firmly on hold, so it's very much about a risk appetite cross here. I see euro yen a little bit sideways now in the very short term, and I don't see any big moves there. Looking further ahead, I think that we will see higher euro yen levels again, but that's a little bit further out.
Anders, thank you very much. Well, viewers, that's all for this week's last edition of Targets in Focus, but for a full analysis and market reaction to those NFP figures, click back to Dukascopy TV for an interview with my colleague Natalie MacDonald. Have a great weekend.